everyone and welcome to our first chapter, Supply under GST. So what we are going to do is we are going to discuss all the question answers of Test Your Knowledge directly from the module. Hope you have a good learning session. So moving on to question number 1, what it says, Satyamev Printers is a printing house registered under GST. So Satyamev Printers is a registered person. Okay, it receives order for printing 5,000 copies of a book on yoga and meditation by a well-known yoga guru. The content of the book is going to be provided by yoga guru. So you have to see here that the content is of more importance. Okay, content is being provided by the supplier. So it's a supply of services of the contents of the book. Now it is agreed that Satyamev Printers will use its own paper to print the said books. So Satyamev Printers, who is the service provider, is going to use its own goods. Okay. So it has goods, that is the paper, and it has services, that is the content of the book. Now, what the question is saying, you are required to determine the rate of GST applicable on supply of printed books, assuming that the rate on supply of services is 18% and the rate applicable on supply of goods is 12%. So here we are given the rate of services is 18% and rate of goods is 12%, and we are supposed to find the rate of GST applicable. So here, as you can see, there are two supplies. One is the content of the books and second is the papers which are being used to print the said books. So let's come to the answers, what they are saying. So see, what they are saying is that this is, see, section 2030 provides that a composite supply. So it is a case of composite supply. Why is it a case of composite supply? Because in case of composite supply, we have a principal supply and a supporting supply. So here our principal supply is that of the contents of the book. So contents of the books are the main things which are being supplied here. Now the contents of the book cannot be supplied without papers. Okay. So papers are an auxiliary supply or a helping supply. Okay. So it is a case of composite supply, which means that a supply made by a taxable person to a recipient consisting of two or more taxable supplies of goods or services or both, or any combination thereof, which are naturally bundled and supplied in conjunction with each other in the ordinary course of business, one of which is a principal supply. So which conditions you have to check for composite supply, whether it is a natural bundle or not. What is a natural bundle? Natural bundle means in ordinary course of business, that is in the usual practice of the business, they are being sold together only. They are not to be sold separately. So here content of the books cannot come without paper. So it becomes a composite supply, and the principal supply is your main supply. So your main supply here is the content of the books. So, whatever rate, now see further circular number 11/11/27, what it says that supply of books, pamphlets, brochures, envelopes, annual reports, leaflets, cartoons, boxes, etc. printed with logo, design, name, address, or other content supplied by the recipient of such printed goods are composite supplies. So if you have any books, pamphlets, brochures, envelopes, annual reports, leaflets, cartons, boxes, along with the logo, design, name, address, or any other contents which are supplied by the recipient, okay, which means that if your printing services are your major supplies, along with the goods like books, pamphlets, brochures, these all will fall under the case of composite supplies. Now, as per your section 8A, a composite supply comprising two or more supplies, one of which is a principal supply, is treated as a supply of such principal supply. So, in case of composite supply, the supply will be considered as the supply of the principal goods or services. Okay. So we need to ascertain what constitutes the principal supply in this supply. So again, as per section 29T, principal supply is the supply of goods or services which constitutes the predominant element of a composite supply and to which the other supply forming part of that composite supply is ancillary. So as I said, there is one main supply and then there is a helping supply or a supporting supply. So here the constituents of the books are my main supply and what is helping me to provide that service is the papers. So papers are my supporting or helping services supply. Okay. So, the above circular further clarifies that in the composite supply of printing of books, pamphlets, brochures, annual reports and the like, where only content is supplied by the publisher or the person who owns the usage rights to the intangible inputs, while the physical inputs including paper used for printing belong to the printer. Supply of printing of the content supplied by the recipient of the supply is the main supply or the principal supply and therefore such supplies would constitute supply of services. So in the given case, the supply of printed books by Satyameva printers is a composite supply wherein the principal supply is the supply of printing services and therefore the rate applicable for the value of principal services being 18%, here the applicable rate will be 18%. Okay, I hope this is clear. Now moving on to the next question. Okay, so the next question is Sudama Associates a registered supplier? So see, you have to always keep noting the information given in your question. So Sudama Associates is a registered supplier. Now what they are doing? They are disposing the computers owned by the business without consideration. So which is this case? This is a case of your deemed supply. Okay, and it has not claimed ITC on such computers. So they have not claimed the ITC. Examine whether disposal of computers by Sudama Associates qualifies as deemed supply under Schedule 1. So what was the condition for deemed supply under Schedule 1? That there should be disposal or permanent removal of your business assets. So there is a disposal and the assets were business assets, that is computers. But there was a condition that ITC has been claimed and then only it will be considered as supply. But here in the given question, it is said that ITC has not been claimed. So this will not constitute a supply. Let's check. Okay. So see, as per section 7(1)(c) of Schedule 1, that is the things for deemed supply. Permanent transfer or disposal of business assets is treated as supply even though the same is made without consideration. So so we saw in the definition of supply that there should be consideration and it should be in the course or furtherance of business. But then as per Schedule 1 deemed supply, even if there is no consideration and there is permanent transfer or disposal of business assets, it will be considered as supply. But there was a condition that the disposal of the condition was that there should be ITC should have been availed on such assets. Therefore, the disposal of computers by Sudama Associates is not a supply as ITC has not been availed on the same. Now moving on to, I'm sorry for this disturbance. Okay, so moving on to the third question. Shivaji Private Limited, a registered supplier, supplies the following goods and services for construction of buildings and complexes. So they are supplying excavators at a per hour rate, manpower. So you have this excavators are your goods, manpower is your services. You have soil testing and seismic evaluation services. Now the excavators are invariably hired out along with the operators. So excavators are hired only along with the operators. And then further they are saying that excavator operators are supplied only when the excavator is hired out. So this is your composite service, okay? They are not sold separately. Then for a month, the receipts exclusive of GST are given. Higher charges of excavators 18 lakh, service charges for supply of manpower 20,000, and service charges for soil testing and seismic evaluation at 2,50,000. So you have to find out the GST payable by Shivaji Private Limited for the given month, and the rates are given. Hiring rate is 12% and supply of manpower and soil testing is at 18%. So you are supposed to calculate the GST liability for this month. Okay. So see, we are given hiring charges for the excavators and the value of supply is 18 lakh. Applicable rate is 12%, which comes out to be 2 lakh 16,000. Now why the rate is 12%? Okay. See, they have given 12% for hiring out of excavators, and hiring charges we are given 18 lakhs. So that is very simple and it's done. The next thing is supply of manpower sources, that is at 18%. Now what we are told is that excavators and this manpower, they are not exclusive services, okay? So when you have excavators, you are going to require manpower to operate them. So it is a your composite supply, and in case of composite supply, we will apply the rate of the principal supply. So what is my principal supply over here? See, excavators are invariably hired out along with the operators, and operators are supplied only when the excavator is hired out. So if there is no hiring of excavator, I will not be supplying the excavator operators. So it is a case of composite supply, wherein my principal supply is the hiring out of excavator. So whatever rate is there on excavator, same rate I will apply to supply of services of excavator operators. Okay, so as per section 8a, the composite supply is treated as supply of principal supply. Therefore, supply of manpower for operation of excavators will also be taxed at the applicable rate of hiring out of excavator, that is your principal supply, which is 12%. Okay, so here you can see service charges for supply of manpower for operation of excavators. The value is 20,000 and the rate applicable is 12%, which computes to 2,400 as your GST. Then the third thing we have is service charges for soil testing and seismic evaluation. Now the rate given for this is your 18%. Okay, they have given 18%, and this service is independent of hiring of excavator. So I will be charging it at the applicable rate of 18%. The value is 2,50,000. Applicable rate is 18%, and it works out to be 45,000. So my total GST liability is 2,16,000 plus 2,400 plus 45,000, which comes out to 2,63,400. Okay. So next question. Sorry. Yeah. Mr. I'm so sorry. Mr. Kanjilal Adani is an oil exploration and production contractor and is registered in the state of Gujarat. Okay. So we have an individual, Mr. Kanjilal Adani, registered in state of Gujarat. He entered into a production sharing contract. So he entered into a PSC with government of Gujarat, wherein he gets a license to explore, exploit and sell the petroleum crude and or natural gas from the government in Aliabit oil field in lieu of royalty and a share in profit petroleum. So this is a case of production sharing contract, wherein what he is getting the license to explore, exploit and sell the petroleum for royalty and a share of profit petroleum. Now, in the month of June, Mr. Kanjilal Adani explored the petroleum reserves at Alibet oil field, and he got a portion of petroleum slit worth rupees 3 lakh as part of compensation, which is non-taxable under GST. These petroleum slit is part of cost petroleum as per the contract. So as per contract, it is a part of his cost petroleum. So you have to tell you have to examine the liability taxability of petroleum slit covered slip received by Mr. Kanjilal Adani under GST law. So let's see. See here, compensation received by Mr. Kanjilal from the government is part of cost petroleum that they have mentioned. Now, as per circular, cost petroleum is not a consideration received by the oil exploration production contracts for the services provided to government under petroleum sharing contract and thus not taxable per se. So in this circular, it is clearly mentioned that whatever cost petroleum you are receiving as a part of consideration is not considered, is not taxable. Okay, it is not a taxable consideration. Now, what is the reason? The reason for the same is that contractors carry exploration and production of petroleum for themselves and not as a service to government. Okay, so they are not doing that as a part of service to the government. That is the reason it is not considered as your cost. They have acquired the right to explore, export and sell petroleum in lieu of royalty and are sharing profit petroleum. Consequently, the cost petroleum received is not taxable. So only the Okay, so moving to question number 5. Angat Private Limited is engaged in the business of distribution of construction material. As an incentive, Angat Private Limited pays an amount of 75,000 to its employees upon achieving a specified sales target. The incentive is part of the salary. The important thing to note here is that incentive is a part of salary of employees. So it is being paid in the relation of employee-employer, okay, and it is a part of salary. So obviously GST won't be leviable on the same. Now the applicable tax is deducted at source as per relevant income tax provisions, okay. Angat Private Limited is of the view that GST is not leviable on such incentive, whether the view is correct or not. So it is correct view. Why? Because that is part of your salary and not a taxable supply. Okay. See, yes, Angat Private Limited's view is correct. So as per your section 7.2 with your schedule number 3, okay, so that services by an employee to employer in course or in relation to his employment shall not be treated as supply under GST. So this is the first point. Then second thing is that the amount paid by incentive is not in the nature of gift. So we have seen for deemed supply that if it is in the nature of gift and if the value is more than 50,000, then that will be treated as supply. So here the value is more than 50,000, but since it is not in the nature of gift, it is outside of coverage of that point. Okay. In fact, in the given case, the incentive is part of the salary. Okay, incentive is part of your salary and it is directly linked to your sales target. So the services provided in the course or in relation to employment by the employees for which incentives are given to them shall not be treated as supply. Okay, so because of this, GST is not leviable on the incentive paid by Angat Private Limited to its employees. Supplies technical consultancy services to its clients. It has been providing technical services to BA Limited Mumbai since past 2 years. Now, consideration is settled by BA Limited assignment wise. BA Limited is paying 37 lakhs to XYZ Consultancy for agreeing not to provide similar technical services to any other business entity in India or abroad for a period of 8 years. So the 37 lakhs provided here is a consideration for non-compete fees. It is a consideration being provided so that the business entity does not do a competing business in India or abroad for a period of next 8 years. So these has been specifically treated as supply by a circular. So we are supposed to examine whether the view taken by XYZ consultancy is valid in view, and it may be noted that BA Limited is not ready to pay any further amount to XYZ consultancy in relation to the amount already agreed. So let's check the answer. See what is given. XYZ consultancy is providing the service of agreeing to obligation to refrain from an act. Okay, So not to act in a certain way, and for that they are getting a consideration of 37 lakhs, which as per the circular number 178/10/2022 is a specific supply. Okay. So the same is liable to tax under GST law, and so the view taken by XYZ consultancy is incorrect. Moving on to next question, we have Moksha Bhumi Industries, question number 7. Moksha Bhumi Industries has its manufacturing unit in the state of Maharashtra. It stores finished goods manufactured by it at a depot located in state of Gujarat. Okay, so the manufacturing unit is in Maharashtra and the storage unit is in the state of Gujarat. The depot is owned by Punya Bhumi Limited, a related person. Okay, depot is owned by a related person. Punya Bhumi Limited has not charged any consideration from Moksha Bhumi Industries for usage of depot for storage purposes. Whether the storage of goods determined by Punya Bhumi to Moksha Bhumi qualifies as supply. So this is a case of related persons providing supply of goods or services without consideration. So it will be a case of deemed supply. And C. As per section 7(1)(c), along with schedule 1, supply of goods or services or both between related persons without consideration when made in course or furtherance of business qualifies as supply. So here Punya Bhumi Limited and Moksha Bhumi Limited, they are related persons. They are providing services or goods to each other and they are not giving consideration, but still as per your schedule 1 section 7(1)(c), this will fall under the case of deemed supply, and so even though there is no consideration, it will be supply under GST. Now moving to the next question. Sorry. Rob Shareholding Limited, an approved intermediary, has entered into an agreement wherein certain securities were to be lent to Dhanbandhan Bank under securities lending scheme. Now say securities are out of the definition of supply. Okay, so supply specifically excludes your securities, but there is a specific case of securities lending scheme. So let's see the question. Dhanbandhan Bank shall pay specified lending fee against such lending of securities to it. Explain the taxability of the transactions involved. So here you will have two transactions. One is that of the security lending and another is the fees or commission charged for providing the services of securities lending. Okay. So say securities lending scheme facilitates the lending and borrowing of securities. Now, securities are neither covered in the definition of goods nor covered in the definition of services. Okay, so securities are out of the purview of your supply. Therefore, a transaction in securities which involves disposal of securities is not a supply in GST and hence not taxable. Okay, so since because securities are out of your definition of your supply, it is not a good nor a service. So on sale of securities, supply will not be invoked and so GST will not be leviable. But SLS doesn't treat lending of securities as disposal of securities and therefore it is not excluded from the definition of services. The lending fee charged from the borrowers of securities has the character of consideration. Okay. So whatever lending fees you are providing for making these services, they will fall under the definition of supply of services and it will be chargeable under GST. So, apart from above, the activities of intermediaries facilitating lending and borrowing of securities for commission of fee are also taxable. So, as per this circular, it has specifically made that if any intermediaries are facilitating lending and borrowing of securities for a commission of fees or consideration, then that commission or fee on that portion GST will be leviable. So accordingly, here we have two transactions. The sale of securities is outside my supplies definition, so no GST on that. But the fees or commission for facilitating this transaction comes within in supply, and so GST will be leviable. Now, next question. Krishnadev is a trader based in India. Ramakrishna, brother of Krishnadev, is located in China and is also engaged in business of trading of goods. So Ramakrishna is your related person, okay, brother of Krishnadev. Krishnadev Krishnadev places an order with Ramakrishna for procurement of certain goods from local market in China. So this is importation of goods. Before the shipment of goods from China to India, Krishnadev sold such goods to Krishna, a trader located in Brazil. So before the goods could enter into India, the goods were sold. So this is a case of high sea sales, wherein the goods before entering the premises of India is sold outside only. Okay. The goods were subsequently shipped from China to Brazil. So what is happening? The goods are not entering into India. So for taxability to occur in India, the goods should be coming to India. But in this case, since goods are not coming to India, they are being sold from outside only to an outside territory. Okay. So GST will not be leviable. What you have to do? You have to comment on the taxability of transaction. So let's see the answer. See. The transaction between Krishnadev and Krishnenu is in the nature of merchant trading, okay, merchant trading, or you can say high sea sales. As per Schedule 3, transactions involving sale of goods from a place, see, sale of goods from a place in non-taxable territory to another non-taxable territory, okay. So we saw that goods are never entering into India. Goods are directly being sold from China, that is your one non-taxable territory, to Brazil, that is your another non-taxable territory, without such goods entering into India, then that should not be treated as supply of goods nor supply of services under GST, and therefore the transaction between Krishnadev and Krishnenu shall not be treated as supply and is thus not leviable to GST. The next question is, Mohandas International entered into a transaction for import of goods from a vendor located in Italy. Due to financial issues, Mohandas International was not in a situation to clear the goods upon payment of import duty. Mohandas International sold the goods to Radhakrishnan Export House by endorsement of title to the goods while the goods were in high seas. Okay, so this is a case of high sea sales. I'm sorry for the previous one, that was not a high sea sale. Okay. So what is happening is that Mohandas International is not able to clear the goods. So goods are there in your export house, okay, and from there only you are making sales. The agreement further provided that Mohandas International shall purchase back the goods in future from Radhakrishna Export House. So discuss the taxability of the transactions. So here two transactions are involved. Let's check the answer. See. As per Schedule 3, your high sea sales transaction, that is supply of goods by consignee to any other person by endorsement of documents of title to the goods after goods have been dispatched from the port of origin located in outside India but before clearance for home consumption shall be treated as neither supply nor supply of services. Okay. So here the important point to be remembered is that if the documents of the title is being sold, that is if the goods are sold before clearance for home consumption. So we will see in the chapter of customs that once the goods receive the clearance for home consumption, they form part of goods of India. So before that, they are outside, not in the taxable territory. Okay, and so they are not treated. They are neither treated as supply of goods nor as supply of services. So for these transactions, the sale of goods by Mohandas International to Radhakrishnan Export House in high sea sales shall not be leviable to GST. Now we shall see the second transaction. See, further, import duty including IGST shall be payable by Radhakrishnan Export House at the time of clearance of goods at port of import. In case the goods are sold back by Radhakrishnan Export House to Mohandas International at a subsequent point of time. Okay. So once they are the part of your Indian goods and then they are further sold, then same will be treated as your normal domestic sale transaction and GST shall be leviable on the same provided other conditions prescribed are applicable and met. Okay. So it had two transactions. The one was that of when the goods are not forming part of your Indian goods, okay. So goods before cleared for home consumption are sale, in that case GST will not be leviable. Now after payment of duty, the goods are forming part of Indian goods. Now from here, any sale will be considered as a normal domestic sale, and it will invoke your supply, and then GST will be leviable on the same. Now question number 11. Mr. Happy, registered under GST, has a huge residential property located at a prime location in Mumbai, Maharashtra. He has let out first and second floor to Mr. Peace for residential purposes. Mr. Peace, registered under GST, surrenders his tenancy rights to Mr. Serene for a tenancy premium. So see here, the giving of residential house property on rent is not a taxable supply, but surrendering of tenancy rights is a supply, and so GST is leviable on that portion. Mr. Serene has also paid the applicable stamp duty and registration charges on transfer of tenancy rights. Moreover, Mr. Serene has agreed to pay a monthly rent of 1 lakh to Mr. Happy from June. So we have to ascertain whether GST is payable on tenancy premium. Yes, GST is payable on tenancy premium. Whether GST is payable on monthly rent. So for monthly rent, we will have to check the conditions. See, as per circular number 44/2018, clarifies that the activity of transfer of tenancy right against consideration is clearly covered under supply of service liable to GST. Okay, so tenancy premium is covered under the under the definition of supply of services, and it is liable to GST. It is form of lease. See, it is a form of lease or renting of property, and such activity is specifically declared to be service in your schedule 2. That is, any lease, tenancy, easement, license to occupy land is a supply of services, and so GST will be leviable on the same. Now, although stamp duty and registration charges have been levied on such transfer of tenancy rights, it is still subject to GST. Okay, so leviability of your stamp duty and registration charges will not let it get out of the supply. Just because it involves execution of documents which may require registration, it would not preclude it from the scope of supply of GST from payment of GST. Now, the transfer of tenancy rights cannot be treated as sale of land or building in Schedule 3, okay? Because it is specifically said by circular that it falls under Schedule 2, so you cannot take it to Schedule 3. Thus, it is not a non-supply under GST, and consequently consideration for the said activity shall attract levy of GST. Services provided by outgoing tenant by way of surrendering the tenancy rights against consideration in the form of portion of tenancy premium is liable to GST. So, tenancy premium of rupees 10 lakhs received by Mr. Peace for surrendering is liable to GST. Then, the circular further clarifies that since renting of residential dwelling for use as a residence to an unregistered person is exempt, okay, so since this is specifically exempt, so GST will not be leviable on the same. But grant of tenancy rights in a residential dwelling for use as residential dwelling against tenancy premium or periodic rent or both to an unregistered person is exempt. So consequently, your monthly rent of rupees 1 lakh received by Mr. Happy from Mr. Serene is exempt. Now moving on to next question. So question 12a, Rudraksh Kapoor, owner of Rudraksh Publishing House, Ghaziabad, UP, donated some money to Divya Prakash Charitable Trust in the memory of his late father. Divya Prakash Charitable Trust constructed a room in the school run by it from such donation and wrote donated by Rudra Prakash Kapoor in the memory of his father on the door of the room. So constructed, examine whether the money donated by Rudraksh Kapoor is leviable to GST. So this is not leviable to GST. Why? Because it is in philanthropic purpose, okay, not as a motive of advertisement. Now let's see the second case. In the above question, if Divya Prakash Charitable Trust had written on the door of the room constructed that donated by Rudra Prakash Publishing House, Ghaziabad, UP. So here it is a kind of consideration being provided for advertising services by writing the name that it is by the publishing house of Ghaziabad. So in that case, it will be taxable. Now let's see the answers. See, circular number 116/35/2019 has clarified that in case of donations received by a charitable institution, when the name of the donor is displayed in recipient's institution's premises in such a manner which can be said to be an expression of gratitude and public recognition of donor's act of philanthropy and is not aimed at giving publicity to the donor in such a manner that it would be an advertising or promotion of his business, then it can be said that there is no supply of for a consideration. Okay, so in the first case wherein just the name of the donor is written, that is not in case of an advertising or promoting the business. Okay, it is just an expression of gratitude, so in that case it will not be leviable to GST. Now, donations received by charitable organizations are treated as consideration only if there exists a quid pro quo, that is, something in return of something. So, when there is an obligation on the part of recipient of the donation or gift to do anything, then that will be treated as supply. So, in the second case, what is happening is they are writing publishing house. So they are in a way promoting or advertising the business. So in that case, GST will be leviable. See, in case it is, in case the gift or donation is made to a, so you have to check three conditions. If gift or donation is made to a charitable organization, if the payment has a character of gift or donation, and if the purpose is philanthropic, that is not for advertisement or for commercial gain. So we have seen in case number 1, okay, it is only an expression of gratitude and public recognition of Rudrak's act of philanthropy and is not aimed at advertisement. So GST is not leviable. Fine. And in the second case, we see that the name of the publishing house is displayed. Okay, it is might be aimed at advertising or promoting, and so GST is leviable. Now question number 13. Ms. Kajal, a registered supplier of Jaipur, Rajasthan, has made the following supplies in the month of January. First one is supply of laptop along with the laptop bag to a customer of Mumbai for rupees 55,000 exclusive of GST. So this is a case of your composite supply, so laptop along with the laptop bag. Okay. Then second one is supply of 10,000 kits at 50 each amounting to 5 lakh rupees excluding GST to Ram Fancy Store in Kota. Each kit consists of one hair oil, one beauty soap and one hair comb. So here see hair oil, beauty soap and hair comb I can sell separately. So this is the case of mixed supply. Then the third one is 100 kits are given as free gift to Jaipur customers all unrelated on occasion of Miss Kajal's birthday. And each kit consists of hair oil and beauty soap. Again it is a mixed supply, and what they are saying, ITC has not been taken on the goods. Then the next thing is event management services provided free of cost to her brother, wholly dependent on her, so it is a related person, for his son's marriage, function in Indore, and so it is in the course of furtherance of business from a related person, importation of services, sorry, not importation of services because this is in India only, and the cost of providing services is 80,000. Then next we have is 1400 chairs and 100 chairs had out to function garden Ajmer for rupees 3,30,000 including cost of transporting. So here again this will be a case of composite supply of these goods along with this transportation services. Since Miss Kajal is not a GTA, transport services by her are exempt. Okay, but we have to see that this is a composite supply. Let's check the answer. So see, this, as I told you, it is naturally bundled. It is a composite supply. So we will apply the principal supply rate, that is laptop rate, which is 18%. Then for second, it is a mixed supply. So mixed supply will get the highest rate, that is 28%. Now free gifts will not be considered as supply. Okay, it is specifically given in schedule 1 that free gifts are out of supply, so 0. Then you have event management services. It is given free of cost to brother. So since it is given to related person, it will be covered by schedule 1 as deemed supply. Okay, and so here it will be taxable at the rate of the said service, that is 5%. Then for chairs and coolers which are hired out, since transportation services are exempt, but since it is a case of composite supply, so the entire amount, including the charges of GTA, will be taxable at 12%. Okay. And now coming to the very last question of this chapter. So question number 14, what it says, Chandragupta Maurya is an artist who makes contemporary paintings. He is registered in state of Kolkata. Chandragupta Maurya appoints Dhruv Kumar to auction his painting in Maharashtra. So it's a case of auction. Now Dhruv Kumar arranges for the auction and identifies potential bidders. So Dhruv Kumar is an agent. Highest bid is accepted and painting is sold to the highest bidder. Now we have to check if the invoice is in the name of agent itself. See, the invoice is issued by Mr. Dhruv Kumar on behalf of Chandragupta Maurya, but in his own name, and painting is delivered to the successful bidder. Okay. So this will be again treated as supply schedule 1. See, as activity or transaction qualifies as supply under GST only if it is undertaken for a consideration and is in course or furtherance of business. However, supply of goods by principal to his agent where the agent undertakes to supply such goods on behalf of principal is considered as supply even if made without consideration, provided the invoice is issued by agent in his own name. So in this given case, we saw that the agent has invoiced in his own name, so it will be.
Okay. So further, circular number this states that where the invoice for further supply of goods is being issued by the agent in his own name, then any provision of goods from principal to the agent would fall within the fold of para 3 of schedule 1. So it will fall under schedule 1 as deemed supply. So in this case, Dhruv Kumar is not merely providing auctioneering services to Chandragupta Maurya, but he is also supplying the painting on behalf of Chandragupta Maurya. Okay, and so he has the authority to transfer the title on behalf of Chandragupta Maurya, and he issued the invoice in his own name for supply of painting. So the important point here is that the issue was issued in his own name. So in that case, Dhruv Kumar will be considered as agent of Chandragupta Maurya under Schedule 1, and this transaction is that of a deemed supply. So with this, the questions of this chapter gets over. I hope you have good learning experience. I would love to receive your feedback on the same in the comments below, and if you have any doubts, you can definitely ask me in the comments below. Also, if you have any doubts or if you liked any part of this video or you need any improvements in the same, I'd be happy to receive your feedbacks in this channel, in this Telegram channel. The link for the same will be shared in the description. Also, you can comment and give me your feedback in the comments below. Hope you have a great time ahead. Thank you. Wishing you all happy studies.